Well, let's give you the markets update now. The JSE expected to rebound today amid signs of stability on global markets. Commodity prices also steadied after dropping sharply as investors pondered the implications of rising cases on global growth. For an update now on the latest market moves, Jimmy Moyaha is an independent markets analyst and he joins us now. Jimmy, very good morning to you. So the emerging market stocks and the currencies tumbling on Monday as investors rushed to safe havens on rising COVID-19 cases around the globe. Give us a sense of what the factors are that are driving the sentiment.
Good morning, Tony. So there's been a couple of things that we've had to look at around sentiment in this time as well, not just what's been happening around the COVID cases and the vaccinations. I mean, if you remember last week, following the Fed Reserve announcement and the speech that Powell gave, we definitely saw that as a catalytic type event because America for the longest time had been looked at as sort of the benchmark of economic recovery, and they came out to say that they're adopting a wait-and-see approach. They're saying it's too soon to assume that all markets have recovered, and we've seen that filter through to some of the other areas, filter through to the cases as well. I mean, we know that the UK opened up their economy fully, and for the first time since their vaccination programs have sort of rolled out in full force, they've also reported an increasing number of cases on their perspective. Something else we need to be looking at is the fact that the stock markets as a whole have been quite overvalued and quite highly priced into 2021 off the back of the boom that we saw in 2020. We've basically had all estimates that we had forecast for the year of 2021. All of those estimates were almost all taken out in the first quarter of 2021. So markets globally as a whole are looking at the fact that they're very highly priced. They've had very little retracement and pullback in terms of valuations, and it's whether or not to see from an investor standpoint whether or not there is much room to go higher, or whether we want to come a little lower first before we start that move for higher pricing. So I think there's a couple of factors that have been driving not only emerging market economies but also global economies as a whole in this time.
Let's talk company news, Jimmy. Kumba releasing its production and sales report. That trading statement for the 6 months ended 30 June. Take us through those numbers.
Sure. So their numbers were quite better than anticipated, but this has been the ongoing theme that we've seen with the mining stocks. As precious metals prices have been trading high, as commodity prices have been trading higher, we have been seeing a lot of the companies benefiting from this. We remember when we reported on Sibanye's reports a little while ago, their numbers were extremely high. If you look at Amplatz's numbers that came out today as well alongside Kumba's, their numbers were high. But on the Kumba side, I mean, they've said that they're expecting sales to decrease, so they're revising their sales estimate down by about 1 million tons, but they're saying that they want to keep production levels the same and as what was initially forecast, and they want to then build up some reserves on that front through that, and that's from their perspective, it's a very strategic decision to do, especially if the sales are only being revised down by about 1 million tons. So they're expecting their sales to be about between 39 and 40 million tons instead of between 40 and 41 million tons. So it's still a very high number. They've also come out to say that they're expecting their headline earnings per share in the period to be up between about 170 to 180%. But what was interesting to note on Kumba's side is that the value of their sales output that they realized was about $220 per ton, whereas what they previously said would be sort of their forecasted sales figures would be about $166 per ton. So they are making more money per ton than they anticipated they would be. And again, that's largely off the back of higher commodities pricing, higher demand for commodities and metals around the world. And you've seen that filter through to not just Kumba, but like I said, other commodities and metals mining companies.
Yeah, Anglo-American Platinum also publishing its trading statement for the 6 months ended 30 June. How has the group performed in the period under review?
So Amplatz's numbers were even higher than Kumba's. Amplats has said that their headline earnings per share they're expecting to be up some 500 odd percent. Just to give you a bit of context for that, compared to 2020 June figures, their headline earnings was around 6 billion rand. They're expecting this headline earnings per share to be around 46 billion. So it's a 40 billion rand increase in headline earnings per share, and that's in addition to all they're largely basing that off the back of 29% increase in PGM pricing. But also if you look at the price of platinum from, say, March of last year, platinum prices were trading at around $580 an ounce. So they got as low as $580 an ounce. If you look at February of this year, roughly about a year later, we got as high as $1,300 an ounce. So again, the commodities pricing that we've seen during this pandemic time, we've spoken at length about a commodity super cycle that we've sort of been going through, and we've definitely seen that increase in commodities pricing, whether it's gold, whether it's platinum, it's definitely filtered through mainly to the mining stocks, as they're basically able to achieve much higher revenue figures on the same production levels that they had budgeted for and on the same production cost levels that they had budgeted for. So from that perspective, we've definitely seen that as an ongoing theme within the mining stocks as of late.
Yeah, finally, the Monetary Policy Committee meetings, they start today ahead of that all-important MPC decision on Thursday. The repo rate sentiment is that it's going to be left unchanged, but is there something different that we may hear as far as the tone on economic outlook?
Well, we could certainly hear early conversations around potentially pushing back a rate hike to 2022, largely off the back of, one, what's happening globally, and two, off the back of our economic recovery and growth not going as planned. The one thing to take into account now is that the last time the MPC met and gave us their decision, since then we've had some protest action happen, but we've also, more importantly, gone into level 4 lockdown since that has happened. So those factors will need to be taken into account. I think what Jerome Powell from the US Fed said as well will be taken into account as to the status of the US's inflation being considered transitory. We might see our MPC take a similar view. That would be nice to see. It's quite unlikely that they might, but it would be nice to see them take the same view and say that for the moment, inflation targeting might be put to the side to see what it is that they can do in this interim. I think a lot of it is going to be based on some of the sentiment we've been getting from ratings agencies around the fact that the global recoveries and the forecasts that have been put out for South Africa, initially they were pushed up and they were revised up from earlier in the year. But since then, as we've said, we've had that protest action, we've had that level 4 lockdown. We are still going through early stages compared to everybody else in terms of our vaccination programs, whereas other developed economies have almost completed a lot of their vaccination programs and that sort of thing. So I think the MPC might take a more tentative and cautious approach now, given that they've still got one more meeting before we expect the midterm budget policy statement from the finance ministry in October. So we've still got another meeting with the MPC in September. So I think this meeting might be a bit of a tentative approach to say, let's first assess the full impact of what's happened in Q3 before we make decisions on whether there'll be a rate hike in Q4. So that'll be interesting to keep note of in this week, and it'll be interesting to see their outlook following what they get in terms of Q3 numbers as well.
Yeah, Jimmy Moyaha, thank you very much for that markets update. Independent markets analyst. Thanks indeed for your time.